Good morning, all. Camelback Trading 2724 and the pitfuturestrading.com. Coming to you this Thursday morning, February 27th. And the carnage continues as the Bears are looking to push this down to a very visual level, which we spoke about yesterday, which we've been speaking about. No surprise, we're getting there. We're looking to push down towards the 200-day moving average. Remember I said yesterday we had very, very similar afternoons on both Tuesday and Wednesday, right? And the question was, were the sellers getting caught? Well, yesterday morning, they got caught a little bit as they rallied it, but man, that rally did not last, and we finished with the exact finish that we had on Tuesday. The big difference is here we are on Thursday, gapping lower by a significant amount again. Remember, we have a gap almost 700 points way above here. Right now we're looking at another gap of possibly 400 to 500 points. Right? Last Wednesday we traded as high as 339. Here we are Thursday morning at 306. 33 points wiped out in a week's worth of trading. 3 months of trading wiped out in 4 days worth of trading, with maybe more to come. All right, so our destinations are going to be a lot different this morning from the ones I gave you last night. All the ones I gave you last night, as of now, are getting wiped out. Now, 307.13 is a monthly low. For a long time here, at the 8 o'clock hour, we were battling it. We are below it now, okay? So all the destinations I gave you last night, that was the last one. So right now, there is, I'm going to still give you 307.13, okay? That is a monthly low. We still have just over an hour. We could trade back up to it. That would be a destination on the downside. That is a 10 wide at 308.42. Right now, that would become your first upside destination. If we're to open below there, it'll be inside the gap, okay? 308.42. Now, on the downside then, we have a daily low of 307.03. I'll still give that to you because we're not that far from it. Then we have 306.87, which was 10 wide from November 6th. Again, if we open below there, it becomes another upside destination, okay? Then we had a price probe from November 1st at 306.01, 9 wide at 305.65 from November 1st. Right now, that's a downside. Could always become an upside if we trade open below there. 305.02, afternoon pullback low, and then 2 very, very critical points. 304.74, monthly low, filling a monthly gap of 304.55. And then we also have that same day, 304.74 monthly low, and filling a daily gap at 304.13. Your 200-day moving average is right in the middle of those at 304 and change. Now, that's going to be a critical level for me. Remember, though, as important a level as it is, we have to remember who's selling this market. And it's the longer term, obviously, right? 560 or 570 million so far the first 3 days of this week. This is them selling it again. They don't care about those levels. So, yes, you can maybe take a call position against it to see if it holds the first time. But if they really want to keep getting out, they'll blow through it. So just keep that in mind, okay? Now, below that, we don't have anything until 302.43, which was 11 wide from October 31st. And then 301.73, a weekly low. And I'll stop right there on the downside. So what is the game plan for this morning? Well, again, like I said the last 2-3 days, there is no reason whatsoever to get involved in a period. None. Especially around this 307 level. I mean, do I really want to take a call position if we hold that monthly low of 307.13 I'm talking about? Not really. That's not a lot to lean on. I'd rather see them drive it down even further to the 200-day moving average and then take a call play. At least I know my out, right? If we get accepted below that 200-day moving average, well, then again, they're going to just keep pushing, and I'll get out, reassess, and then wait. Same on the short side. Do I want to short it down here? At some point, you're going to get a relief rally from all this. It might be short-lived, but it will be violent. And you certainly don't want to be caught short when that does happen, right? We thought it might happen here. We thought it might happen here. Well, obviously not. So keep those things in mind. Let market-generated information form. The amount of opportunities you'll get are countless on these days, okay? Now, let's go to the charts because there's a bunch of important things here. So here's your monthly. Boy, have things changed from just a week ago how healthy the monthly was. As we are now looking to breach the trend line on the monthly, the weekly and daily are way below theirs. So now the monthly, the longest time frame, is starting to go below it. Okay? Not only that, if we don't hold 307.13, then you have 304.74, which is that gap then, which is huge. And I do believe we're going to test it. Here's the real important part for me. Now, this isn't so much for us day trading, but it's more important in the longer time frame and what we're looking at. If you get below 304.74, close the gap and get below the 200 and then come back above it, then we could say, okay, maybe we've short-term bottom out and we're in balance. Remember, folks, markets don't go bull-bear. So even though we're down 30-something points, all we are in is a tremendous balance. So say, just for argument's sake, we closed at 304 this month. We're in a $35 balance. More importantly, we have an outside month down. That is long-term negative. The other point is, if we do not hold that 304.74 monthly low, look what comes into play the month before that. 284.82 is that month's low. But more importantly, inside of there is that 287 level that we haven't spoken about since October of 2019. Right? That was a level we battled forever. And you can see it here on the weekly chart. I still have my line there. Look. Ooh, sorry. We battled it all the way back here one time. Right? That's 18. That 287 level started the battle in 2018. Up, failed. Up, got above it a little bit, failed the blowout in December of 18. Back up to it again in 19. Above it, failed. Look how many times it failed until finally, in September of 2019, it got above it, stayed above it, and started this run up. Now, I'm not saying we're going there, right? We still have a ways to go to get there. However, just to put it in your head, I do think we're going to fill this gap and test the 200-day moving average at some point real soon. More importantly is to get back above and hold around that 300, 304 level. If not, you're going to visit that level then that we haven't seen in a long time. And then on the daily, apologize for this sun. I have all my blinds closed also. One time framing down 5 days. This will make 6 to start. We'll see what happens. Here's the 200-day moving average, right? Here's a very visual level from the trend line that we got below. And there's that 287 level again on the daily. Be smart this morning. Let your market-generated information form. Have your reference points and destinations. You will have multiple opportunities. And the key to look for, the real key, is to see volume dry up at some point on the downside to get the laggards, right? The long-term money won't be the laggards, right? They've been selling from here. They have profits. They don't care. There's a lot of profits in this market, right? So, again, they don't care about levels and stuff. But it's the shorter-term players, right? Look at this market. This market's straight up. Even though, look where we are. Oh my goodness, we're down 35 points. Look where we've come from. There's tremendous profits in this market. So they don't care if they're selling here or here. They're still locking in money. It's going to be the shorter term players who start selling it at the low when the volume dries up. Those are the laggards. That's what you have to look for before you really, really want to get involved on the long side. Good luck trading today. Have a great day, and we'll recap at 4 p.m.